Hello and welcome to Personable, a podcast focused on speaking to the world's best, enabling you to become the best that you can be. Whether you're a first-time listener or a returning listener, please make sure to like, comment, and subscribe. Currently, only 3 out of 100 subscribers are subscribed to Personable, and we're trying to grow that to over 1,000 subscribers before I return to Duke and the Fool. Today, I'm honored to be joined by QT and Makoto, as they're otherwise known. QT designed a device in high school in which he helped paralysis patients with psychotherapy. He was accepted in, studied at, and has now dropped out of Duke University. He founded what is known as a yield provider protocol and Arbitrum, if I'm saying that correctly, which had over 80 million in deposits and generated 4 million in fees for its users. And we'll get into more about what that means on the podcast. Makoto, on the other hand, helped design Apple's Touch ID and now creates quant strategies at a hedge fund with over $650 million in management. Together, they are building OpenQuant, an AI-powered investment platform that brings together institutional-grade research and automation to everyday investors from crypto and equities to real estate and any future asset classes, reinventing the way the world captures opportunity every turn. So I feel incredibly honored to speak to you both today, and particularly as you're both, you've led a lot of innovation in your two separate fields. But I want to get started by asking you, and QT, I want to ask you this question first. How did you both meet, and what makes you best suited to build OpenQuant?
Yeah, it was noticeably age gap between me and Makoto. Makoto is a leader and two generations ahead actually in technology compared to me and my friends. But we're really fortunate to have a friend who also went to Duke University, where we went to, me and Harvey. And that friend introduced me to Makoto when Makoto wanted to build these AI powered systems for crypto investments.
So
And
go on.
yeah, this is a platform that is driving both the frontier in both blockchain technology as well as AI and quant technology. So, we each bring a one of our advantages from having operated in this space together and forming a multidisciplinary team in order to solve this challenge.
So, Makoto, if I may ask, if your hedge fund and career are doing very well and you've got more experience than someone like QT, why take the risk to one, work with someone that's had less experience through age, but also if you've already gained success, why look for other ways to be successful?
Yeah, that's a great question. And it's one that we probably get quite often. At my core, I'm an entrepreneur. I have been lucky enough to be a member of some successful companies. From very early stage on to listing on public markets and eventually acquisition by big names like Apple. And then sort of branching off and doing things that were more interesting for myself and things that I was looking to go off and sort of broaden my base of experience and knowledge and capabilities. And I love challenge. And my career is really storied in the sense that I've always taken on some pretty significant challenges. For example, I started a company in that was focused in Southeast Asia that was looking to essentially bring banking services and financial services to the underbanked. And that's a big challenge because you have fragmented regulatory environment there. You have various levels of technological capabilities, et cetera, and obviously you have incumbent stakeholders that are against these type of things because they have vested interests in these spaces and they're extracting a lot of value there, just by virtue of the fact that they sort of have exclusive access to those markets. And I wanted to, as just for this example, I wanted to be challenged to go in and disrupt that, right? To go in and say, hey, although you are from a developing nation, you should not be disadvantaged. You should have access to the same type of credit opportunities that we do in developing nations. And I want to build the infrastructure that can help you because we're in a digital age. So even underbanked or unbanked people, they still have access to to things like TikTok, and they love to sell products there, and they're hyper entrepreneurial, and they're young and they're driven, and yet they can't get access to the same type of financial services that traditional businesses can. And I thought that just doesn't make sense. And they generate a lot of information in those systems, and therefore that information is highly relevant to the health of their business, and therefore if we could leverage that to potentially underwrite products for them, etc. I thought that was a very unique thing to go after. But that's tough. It's tough because you're in there and you're really fighting with regulators, and you're fighting with limitations of technology and even local culture and things of this nature. It just gets in its own way in many ways. And so I've always been the kind of person just who fundamentally wants to take those hard challenges. And if I fail, I fail, and I have failed before, and that's natural when you're especially sort of at the bleeding edge and trying to leverage the most advanced technologies to bring about these changes. Now, you're going to fail sometimes. And so the question about, well, if we're successful in what we're doing at the fund, why would you be incentivized to then sort of come out and do, your own thing in the space? And what I would say is actually my success or our success in what we're able to achieve, and the tools and the knowledge that we have gained in the process and developed in the process of that success, in my opinion, is something that we can avail to a broader market, and then enable more people to have better access to information, sort of not facing the asymmetry of information that people face in these systems, or also being disadvantaged in their levels of sophistication as they're dealing, especially as these open markets, is like I like to call these decentralized systems, where essentially it can be the Wild West, right? And there's a lot of fraud that happens in the markets, and there's a lot of manipulation that happens in the markets, and there's a lot of also inherent risk in the instruments that are being used, and people don't understand these things, but yet people are very attracted to the return, and they see people making tons, and obviously there are people, influencers on X and other platforms that are posting their returns, and there's a natural draw to that, and that has not changed throughout history. It's just that we're in an environment now where it's ubiquitous. And from my perspective, there's so much opportunity out there. There's so much inefficiency in these markets, and there's so much information asymmetry and like I said, these varying levels of sophistication, that now with the advent of these more advanced technologies, especially with agentic AI systems that are able to achieve sort of PhD level knowledge and capabilities, that we can start to avail these capabilities to a general audience, to a broader audience. And so what this means is that I like the challenge of being able to take the sophistication, to take the advantage in a sense that we're able to develop through leveraging these tools, leveraging these insights, leveraging these research capabilities, and then sort of, automating that, right? And automating it and then exposing that in a very natural way, so that people can come in just as you would with a ChatGPT type of environment and say, hey, teach me about this, or I'm interested in this particular protocol, I want to get exposure to it. How can I do that without risking all of my assets? And so that's kind of what drives us. And it's not so much that, obviously there's a lot of opportunity here, but when you're in a hedge fund environment, there's obviously a lot of incentives involved, and you're incentivized to sort of drive returns, because the more returns that you can obviously, yield for the fund, the more that you get personally and benefit from. But I would like to see everyone sort of have the ability to go out into markets with this level of sophistication and start to develop that value for themselves. And I truly believe that we're in an era now, with the advent of these technologies, that we can start to deliver this type of experience. And that's what excites me.
QA, aside from the higher purpose and the democratization of information, which is an important thing that the internet brought and social media has now brought, and it seems what you guys are trying to do that as well. aside from that pure perspective, because that would be almost non-profit-esque, purpose-esque driven business, from a profit, standpoint, it kind of seems counterintuitive, the idea of, from Makoto's perspective, in which you're at a hedge fund, you're generating alpha, you're generating returns. From QA, from your perspective, if you can already create some form of quant algorithm or AI capabilities to deliver returns for yourself and potentially get capital behind that, why not retain exclusivity to information? Why not go down the path of, hey, we can get PhD level knowledge, we have an upper hand against 99% of the people, go into developed markets and generate alpha there? QA, from your perspective, from a profit standpoint, why is it so imperative to bring the same level of tools that they're using at the top to the masses?
Because there is a lot of value to be received for the people who build these systems, because the inefficiency is very large between these sole operating participants on the market. Whether they are retail or they have a higher understanding or they have a lot of capital to deploy, they are still injured in some sense in operating and deploying their capital efficiently. So if you build a system where all of these needs of deploying capital, such as, you want to find the coins with the most narrative, the biggest narrative behind it, and deploying that. And if you could build a strategy engine that builds a strategy for these retail, you both help them deploy their capital, but you also create immense value running through your system, which you take a percentage fee out of. And so, it's not just a social purpose. This is a system in the truest sense of a win-win system for the people who build this platform, to be able to both drive a lot of value for stakeholders, but also drive a lot of value for people who use this platform to deploy their strategies. Yeah.
So, Makoto, you've kind of gone, you've explained top level, and QA, you've done the same top level on what this is. Could you explain, as if talking to someone that's a beginner in finance, because I guess that's more who your audience is, what is OpenQuant explicitly? How is it differentiated from other products in the market? Why is there a need for this, and what makes it unique?
What OpenQuant is, it's essentially the ability to come in to a system that has access to a wide variety of information. It could be proprietary signals. It could be open information, for example, from X, that could be, sentiment oriented, for example, and then essentially being able to mandate research over that, to find opportunities of investment or to find theses of investment, and then proving those theses out through essential strategy development, testing, and deployment. And so what that means is that first phase, and if you get down and think about this too, is these are very much the things that funds do, right? And so you have research analysts, PhDs, that are familiar with, from first principles, let's say, decentralized technologies or DeFi or these various protocols. And so they know these things quite deeply. And then they will go off into certain verticals and they will do deep level of research into this to try to find opportunities. They'll try to find correlations. They'll try to find things that they think are patterns that can help us to potentially get some type of alpha, to get an edge, that if we can develop a strategy under and replicate and test and prove it, then it could be valuable for the fund. Then the next phase is that we take those theses and then we actually build strategies, which are logic modules. And these are, algorithms, or they could be machine learning models that are trained on data that's relevant to it. But essentially, these are generating signals. And those signals are telling you, okay, this information is now signaling, or it's showing you that you should be allocated or not allocated to a particular asset or asset class. And that may be weighted within a portfolio or within the strategy itself. Okay, so then you formulate and develop these strategies, and then you go through a process of refining, and that refinement comes through back testing. You take real world data, you take market data, you take market influences, you take venue specific aspects of trading. For example, if you trade on one venue, it might not have as much liquidity, or you might have more slippage, or you have various fees. You have things that are different across venues and across trading platforms that you have to take into account, and all of that stuff has to be understood in the dynamics of when you're testing those strategies. And so we have a team of quants that will go in and choose the appropriate algorithms and choose the appropriate models to help to capture that thesis in a strategy form, and then back test and prove that indeed, okay, these are the type of returns that we can potentially get, and here are the risks associated with those returns in a final analysis that's done on that, a performance analysis. And
Wait,
then
sorry. So is it more like you have your own quants, and then the people on the site have their own options of what strategies to follow, versus, I want to potentially look into this strategy. You kind of lay it out there, and then they invest in you guys. So it's almost like a pooled fund sort of situation.
No, I think what's important is to understand why I'm kind of talking you through the process of a fund, so that we can put that in the context of what we're doing in OpenQuant.
Okay, so this isn't just specific to OpenQuant. This is just...
Yeah, so I'm giving just a background of what's involved when you're developing these things. Okay, when you're developing a portfolio strategy.
Of course.
Okay, so you run that through back tests. Then you do parameter tuning. So you do hyperparameter tuning. You're going to go in, you're going to say, okay, well, we need to adjust these settings. We need to adjust these inputs, the weight of these inputs, and then test that, and then retest that, and retest that multiple times until you finally hit the return and risk profile that matches your mandate, right? Because that's key in a fund. And this actually goes back to your question too, as to, and that you asked Quoc, is you're a fund and you have all this alpha, and you have all this proprietary research that you've been doing. Well, why would you then want to expose something like that enables you to achieve these things to a broader audience? And the reality is that, from the perspective of, let's say, the average DGen, or the perspective of the average market participant in decentralized finance, funds can be quite boring, to be honest. And what that means is that we're very risk averse, and we also manage so much in terms of capital that we can't expose ourselves to smaller market cap, less liquid type of investment instruments and assets. And so what differs here is that we're able to broaden our universe of activity with these type of tools, and in an environment that's not a large hedge fund, if you can understand that. Okay, so understanding this process step by step, we looked at this and we said, well, these are things that, for one, we can enhance through the leveraging things like large language models, like agentic AI, for example, on the research side, which now deep research, pretty much all of the main AI organizations now, the foundation model companies like Google, like OpenAI, like Anthropic, they all now have a deep research agent, right? At pretty much everyone you look at. And these deep research agents are actually achieving pretty phenomenal results. I don't know if you sat down with O3 recently from OpenAI and actually asked it to do some, deeper research into particular topics, and just, talk with you as an expert in the field, as if it has a PhD. It'll blow your mind in how the level of depth of understanding that it has, the ability to use tools to prove out various aspects of its findings, even from mathematics and applying models, etc., like this. And so what we found is that the tools are really powerful already. They're already achieving PhD level sort of outputs. So that's exactly what we're doing at that first phase in research. So we could apply that there to automate aspects of it. Indeed, that's what you do. And then when we look at, okay, well, that's great for the research. That's great for going out and sort of building a thesis. Well, how then can we go to the next step of developing that thesis out through, the various signal module development and then testing? And if you really look at that, that's a process too, right? You have quants, These are mathematics quants, statistics quants, and the PhDs from top universities in the world. And they come in and they say, okay, well, here are the signals that we need to create based upon the information that's available. This may be, things like inefficiencies in options pricing. It could be, inefficiencies in futures pricing, etc. So how can we use these things to create something that will then give us signals as to whether or not that it's time to be long or time to short or time to not even be allocated, for example. And so there's a process involved with that is also very replicable, right? I mean, it's a step-by-step thing. If you think about it, there's a standard operating procedure that we go through when we develop these things. And that's something that we can also employ agentic systems to do, right? And so that's something that we recognize and that we felt like, okay, well, this is because we've gained this knowledge and we know how these systems work, in the context of a fund. And also, given the fact that now these AI systems are so capable, why don't we, and we do believe we can, and we're proving it, that you can develop these processes leveraging AI. And then once you've done that, you kind of have this tool you can imagine now where the average Joe can come in and say, hey, I've been in Bitcoin. Let's say for 10 years, I invested in Bitcoin. I've been holding. And I've done very well just holding Bitcoin. But one thing I haven't done is that with the advent of DeFi, I should have a lot of opportunity to generate income from my Bitcoin holdings without having to sell it or without having to give custody of that to someone else. But what are the risks there? There are so many protocols, and you hear of them getting hacked every day, right? And so there's just a lot of sophistication in there, and there's a lot of noise. And it's very hard for the average person to then come in and grok that and understand it to a deep enough level to be able to make informed decisions as to whether or not they should be using those protocols, or if they are, how much should they be risking in them. And so what's good about this is that these systems have been trained on all of this data. And so they're adept at and understanding, okay, well, if you have this risk profile, then this is what we can say. You should, think about access to this protocol if you're interested in let's say, this particular meta, like it's an AI meta, or if it's a decentralized infrastructure meta. And to get access to this, well, here's a deep research and a deep analysis that we've done with key points to show you, okay, well, you're going to have risk here. The team is not well known. The development isn't very active. Or, for example, we don't know particularly if infrastructure is going to take off in the future, if decentralized infrastructure makes sense. It's very inefficient, and there's a lot of data privacy issues associated with it, etc. And so how do you go in and understand all that stuff? In today's world, it's nearly impossible for the average person to do so unless you're full-time engaged. And most of us are not full-time engaged in this stuff, let's be honest. But we would love to be able to securely get access to opportunities like that. And so what's great about this system is that you can come in and mandate it. You can say, look, I want to get access. I've heard about these new DeFi protocols and these new AI protocols, and I'd like to get access to this, but I have no clue how to. And I don't want to be so exposed to it that I potentially lose all of my Bitcoin that I've, I said, I've had diamond hands over the last 10 years, right?
Yeah.
And so that's really what this is about.
Yeah, I want to, there was kind of 6 main points which I wrote down, which I thought were particularly relevant as you said that. And I'll say the points and then I'll just start with 1 or 2 and I'll ask QA that initially. The first of those 6 points was, it's similar with ChatGPT. If I'm putting in a piece of homework or a past examination or ask some form of questions to ChatGPT, so, where's Bitcoin going to be in 10 years or whatever the thing is on that, large language model, it's probably going to give me a similar response to someone else. And so I see a risk of people copying each other. The second thing is I see that if you guys have all of this information, to what extent is there a sort of unfair advantage in which you guys are able to oversight all of the market? So for example, I'm interested in getting into sales and trading after going into Duke. And I know that if you have a buyer and a seller on one hand, Goldman Sachs that sit in the middle aren't able to actually trade in the market because they're off the basis of actually being able to see the trades. The third thing is the ethical standpoint. Like, as you said, these investments can be very high risk. To what extent, if hedge funds don't really want to touch it, why should the common day investor be? The fourth point was, will this impact the alpha of hedge funds? The fifth point is, what are the risks of it? And the sixth point is, you mentioned that it would be able to give you all the information that you can understand. To what extent are your algorithms always going to be correct? So QA, I wanted to ask you those first two questions, then we can sort of go down the list. The first of which being, to what extent, if I am a user of your site, with it being built out and corrected and tested, etc., to what extent, if I'm interested in getting into a certain type of investment, am I just going to get the exact same information as someone else, even custom built? And to what extent does that stop me just simply copying those around me to actually get an advantage? And the second question was on that, if I'm feeding you all my information on what I'm interested in getting invested in, to what extent does that give you and Makoto an unfair advantage?
Two very nice questions. First of all, on people using the same strategies, right? So this is a problem that we have to think about for these systems, especially as an emerging technology. So this is not something that's been built before. So the incentives here have not been seen before. So what happens when people can use the same strategy? So how we design the platform is depending on if you want to public your strategy for someone to have access to them, then you could have the option to do that. Alternatively, if you want to just use the platform as a research tool, an execution tool, and keep some of the knowledge that you have had to yourself and just execute in your lane and be in your lane, then you could close off the strategy to public access and essentially use the platform as a search engine in order to develop your strategy. But then that poses the question of, what is the public option to be able to go in on strategies, right? Well, then not all strategies are, very alpha driven. Some strategies, like I'll give you an example, a recent example of what everyone can relate to is with the Trump tariff act and all the uncertainty going on. Then Ray Dalio has published a series of essay claiming that there's a change in world order, right? And that's obviously gained a lot of attention with people all around the world, and people, we don't know if that's true. We don't know if under Trump's leadership, it's going to put America at a position where rising powers are going to overlap America. We don't know yet. So for let's say you are convinced with Ray Dalio's views and you want to position your assets and your capital in order to believe in that view and strategically place yourself to benefit if that comes true, then someone could go out and provide a public thesis of that basket of reacting to for Ray Dalio's views. And then also a strategy against Ray Dalio's views. And people can choose where to allocate their liquidity. And obviously under the hood of these mandates and research topics, you cannot know what the results of the research are, what positions are allocated into that, but that is going to be cryptographically proven to the people who allocate funds. So whatever research is done, it's protected for the sake of the liquidity providers, but they know exactly what's going on because we are using mathematically proven proof capabilities for the results of these strategies. So yeah, you could have overall, you could have public strategies, private strategies, group strategies for people who invest together, and it's an array of how you could use the power of this technology. I will ask for the second question on Edge.
Right,
Then
more like, is it an unfair advantage to you and Makoto to have access to all this information of where people are trading and where they're thinking? Because I know that Robinhood, for example, sells the trades and the informations of users on their site to Citadel Securities. Like, is that like an ethical problem or not? You know, is that something that people should even think about?
So we are building this platform with the purpose of democratizing powerful tools. And it would be counterintuitive that we, as the platform builders, have access to all the information. So we will be, setting safeguards on what we can see from these strategies. We can just make sure they are running okay, and the AI is not making erratic decisions, and the process is operating smoothly for this emerging technology, that is not fully capable of developing this. You still need someone to oversight for the safety of these strategies. But in terms of the positions, right, we are not going to be able to know what positions these strategies are going to allocate into and be able to have access and profit from that. So we are going to place, safeguards, either cryptographic barriers to access these information as well to ensure fairness for the people using the platform, similar to how you wouldn't be able to view the password database of social media sites, even though they do store that.
Yeah, Makoto, can I ask you the rest of those questions and sort of looking at the tertiary consequences of that? I was talking about ethics, you know, if these are high risk trades, you know, have you thought about the implications of that? You know, taking away from the exclusivity that hedge funds have access to these information and democratizing that, will that take away from the alpha of hedge funds? And for, you know, people listening, what are the sort of risks of getting involved? Because it can't all just be upside. And on top of that, how correct can your algorithms be? Are they correct 100% of the time, or is there some degree of risk that has to be taken into account?
Yeah, excellent questions. Okay, so to start asking, about why would individuals who aren't potentially sophisticated investors, if they're getting access to the ability to do riskier quote unquote investments, um, you know, is that a good thing or a bad thing? What I would say is that, and kind of going back to, I think you had mentioned when you first started about this question was, well, as a hedge fund, if you're not willing to be exposed to these, then why would you expose these opportunities to average people, right? Is kind of the question you're asking. That's actually not, I think, an accurate way to sort of represent it, because as a hedge fund with a large amount of allocation, it's not that we don't want access to high alpha opportunities. It's just that in size, it's impossible. You know what I mean? And so, dealing in the sizes that we're dealing with, um, even if we see opportunities that we think are great, if we were to size into that, it would actually sort of counteract the opportunity, if that makes sense, just because of liquidity, or other aspects of it in that sense. And so, on the flip side of that, what I would say is that, although we're mandated to sort of allocated to, let's say, only the top 50 cryptocurrencies, because of the fact that they're sort of staid and true, proven, technology from a protocol perspective, but also have liquidity in the markets that can handle our types of trading, or our scale of trading. Um, Obviously, we see a ton of opportunity in the lower, 50 below. It's just that we literally can't take advantage of it because of our size. And this is a problem that all funds around the world face, to be honest. You'll know trillion-dollar funds that are just pretty much only buying T-bills or, doing large-scale infrastructure development type of investments. And that's just because they can't allocate into anything else at the scale that they're dealing with. And this is also a problem Warren Buffett has. And, he mentions in his retirement, he's like, there's only so many things I can shoot my bazooka at, right? And there's not a ton of targets out there for me. So, yeah. And so from that perspective, indeed, obviously as a fund, we would love to get access to this kind of stuff. It's just not possible. And so on the flip side, that actually means that it's a great opportunity. It means that the tools that we can in fact sort of uncover these opportunities with, or uncover these investment profiles with, now making that available to other people who can allocate, because they're not having to deal with these larger exposures in that sense.
But even if I just even if I look up the definition of risk, and I get that there's the returns are based on the risk you're willing to put out, but literally looking up what risk means on Google, it's the possibility of something bad happening. And I'm sure, as you define it, sophisticated investors, the idea of having a sophisticated investor, from my perspective, is the idea that you sort of understand what's going on, but sort of something built into your business model is that the people investing these things will not understand what's going on. And then you have another inbuilt thing in which 95% of people that trade with options lose money. The majority of hedge funds also lose money. So what are risks that this can't just be a platform which, you come on and everyone comes on and makes money 100% of the time? I mean, that would just be an impossibility. So what are people coming on? What should they be aware of the risks? I mean, we get the upsides, we get the sophistication, the quant analysis, people that are smarter than, 99% of people are offering their trading ideas. But I think it's just as, they have to be fully aware of what's going on here. What are some downsides? What could go wrong? What do people need to be aware about before putting their life savings into a platform that they don't fully understand and that won't work 100% of the time?
Sure. And I mean, look, what's the alternative right now? What are people engaged in? Let's be honest. Right now, the alternative is that a lot of people who aren't sophisticated investors are throwing their money at, rug pulls, at pump and dumps. They don't understand the projects. They just understand the hype behind it. They're getting emotionally driven on X because they see circles of people who are supposedly making large amounts of money from these type of things. In fact, what we're trying to do is educate those people. We're trying to give tools to people who are sort of, we all are naturally inclined to want to earn more from the money that we've earned through our hard work. But without that additional sort of risk of not knowing anything. And so most people now, when they're doing it, the alternative, as I said, is literally going into these Wild West markets and kind of just being, subject to the natural flows of information where, obviously focus and attention gets prioritized for engagement. And these things have been gained for that very purpose, to get you interested in, to invest and put your money into these things. And the reality is that what we're building is a system that can help you understand that better, and then quantify the risks associated with that, right? And so what that means is that instead of going in and saying, okay, well, the latest meme coin has gone up 1,000%, and wow, I'd like to have 1,000% in 2 days. And which a lot of people are very enticed to go in and jump in, and they end up being exit liquidity for these teams. And our system, because it's built on sophisticated understanding of markets, would be able to understand and flag those things. It would actually say, okay, well, if you're interested in meme investments, here are the risks associated with it. Here are the instruments you've mentioned that have maybe caught your attention, and why we wouldn't invest in it, for example, because it has a team that has, high concentrated holdings and a history of rugging, for example. And all of that stuff is what's informing the models. And actually, I would say on the flip side, we're not actually exposing people to more risk. we're actually giving them an opportunity to understand those risks better and make better informed decisions on that basis. And what's great about, and I'm sure you're familiar, having used ChatGPT and having used Cloud and these other systems, is they're really good at educating. And so you can kind of imagine a situation, or not a situation, you can imagine experience with our platform where you go in and you say, well, hey, I hear a lot of noise on Twitter about, these new real world asset, investments. And what are these? What is Ohm and what is Chintai? What are these different things that, and it'll educate you on it. And then say, well, that sounds pretty interesting. What are the risks associated with it? And it can tell you and then break it down in a palatable and sort of more digestible format for the average person. That's why these LLMs are so powerful into really just, contextualizing and making this information more approachable from the average person. The more you want to dig, the deeper it can go in educating you in that sense.
So it's sort of like the same level of risk whilst exposing to other opportunities. You're adding a basis of knowledge to people that they wouldn't already understand. So you're sort of the basis of knowledge and learning more is something that's primarily offered by your platform. I want to transition QA to something more like the quant focus, because I think in recent years, as the word quant for people, it's sort of a learned message. Are they really as smart as the world thinks? Like, are quants the people that everyone should be trying to become, everyone should try to learn from? And do you think there is a need for the average investor that instead of them saying, I like Apple, I want to invest in Apple, or I like Tesla, I like Elon Musk and what they're doing, does the average investor actually need a quantitative view on their investment strategies?
Yeah, this is in my view, a bigger problem than just investing of what being a quant means. Being a quant is being aware of what cards you have at the moment, and how is this new opportunity that you're bringing in is going to influence your current, let's say for our discussion, your portfolio. And a lot of people are driven by the closest thing that they would spike the emotion the most. But it's over to be able to make educated and objective decisions that result in better outcome, then being a quant is both understanding math and all these numbers that what people think quants do, right? But it's also managing your emotions, and I believe that this is a thing to strive for both, a deeper understanding, but also a understanding your being able to stand out of your subjective self in order to be able to make rational decisions. And this is a platform that could educate people on this aspect as well. If you're coming in and being super hyped about a meme coin and trying to allocate your capital immediately, but the platform tells you that this meme coin has only risen that much because it's the peak of the meme coin recent cycle, when and the chances of this going up many magnitudes more is little. And so that is like educative process of people getting checks on their current momentum of their emotions.
QA, I just want to ask one more question on to you. On the sort of crypto landscape that Makoto kind of touched on with relevance to safety and lack of understanding, could you go a bit deeper on like what the current problem is, particularly that what we're seeing in an unregulated industry like crypto from a safety perspective, rug pulls and an understanding perspective? What is the problem that's going on in crypto at the moment, and what is the average investor not understanding?
So, crypto as a technology is a decentralized technology, and the really fascinating thing about it is anyone could write code and publish it on the blockchain, and everyone would be able to interact with it, which is the core innovation that drives a lot of people excited, because you can essentially it's like a vending machine, but and then you don't have to be there in order to operate it. It can, after you build it, it will operate 24/7, and people can interact with it, and you can earn fees if you build this vending machine on the blockchain, and it's called a protocol or smart contract. And and so on the good side, you can build applications that have never been built before, where you can publish decentralized lending protocols where anyone can come in and lend money at any time of the day. You don't have to wait for the bank to open, or for over the weekend when all institutions are closed. You don't have to be in a certain jurisdiction to be able to borrow money, and someone in China or Russia could lend money to a farmer in Argentina. So that's the very fascinating side of blockchains, if these smart contracts or vending machines are built well. On the flip side, then anyone who is and then anyone can be anonymous as well. You can publish code onto the blockchain and decide to induce a bug into it, a mathematical or a code bug, where if after people deposit money in and you decide to activate that bug, you can withdraw all the money from the smart contract. And the very difficult thing is for people to be able to understand, right? And why people are really scared of crypto is because these smart contracts are very code based and complicated. Some of them are very complex, using PhD level math to build these protocols and get lots of deposits, where and then if you can flip the switch and get um, exploited the protocol. So there, no, it's a lot of risk, and with these systems, it's both a very high level of research that you need to know, and so this is part of that a problem of getting an AI that has very powerful research capabilities to research um, every single facet of this smart contract that's put onto the market in order to return, and that's going to decrease a lot of the risk.
I feel like we focused a lot about the company you're trying to build, what you guys have done in your past experience, and the risks as well as the inherent value in what you're building. I want to ask you both some short answer questions, more focused on who you are as individuals. Anywhere from 30 seconds to a minute would be perfect. And we'll start. I'll ask the same question to both of you, and we'll just kind of go down the list. And I'll start with you, Makoto, by asking you what motivates you.
Yeah. What motivates me is equal opportunity. When because it's funny. I have had the privilege of working with some of the top minds of the world, and even had the privilege of having private conversations with some quite influential people. Um, and one of the sort of themes that has come through that is ideas are universal, opportunities are not. And so as humans, we're all sort of born into the lot that we've been given. And there's just a lot of inherent inequality in nature. And one of the things that motivates me as a person is, how do you overcome that? And whether that's through education, whether that's through resources, whether that's through community, um, how can we as a species really overcome this fact? And I am very motivated by the ability to leverage technology to overcome these barriers. And I believe that's where we're headed with advanced AI. That's where we're headed with decentralized technologies like this, because as Quoc Anh said, is that we are, as QT said, we, are in a place where there's just, so much opportunity up in front of us, but we are oftentimes just limited in our ability to get access to those opportunities. And it just super motivates me to be able to build these technologies that can help us to leapfrog over into, the essentially being able to overcome these limitations and giving fair access to opportunity to everyone. That's what motivates me.
QA, I want to ask you the same question.
I love being on the frontier of technology and finding what is the most capable thing out there. So as a kid, I always loved National Geographic, watching science, history, and just getting new experiences. And something that technology is doing is enabling new ways of new paradigm shift always, and so you could always bring that back and solve a lot of problems. So I love to be an entrepreneur, but not in the sense of doing transaction, but in terms of bringing something totally new to solve an old problem. That's what motivates me.
And QA, I'll ask you this question, and then I'll ask Makoto the same one. What's the best piece of advice someone has ever given you?
Koto, you want to go first?
Sure. Gosh, I think the best piece of advice that anyone has given me is gosh, to be honest, I mean, I think it just, the most of the advice I think is stuff that you're just going to hear across media, and across different sort of modes of media, and I don't think there's a lot of differentiation, to be honest, in the types of advices that you get from others.
Or even something that someone's told you and, it's hit your core and you take with you every day.
Yeah, I mean, it's always going to come down to the type of advice that you get from the older generations, and that is that your time on Earth is so short, and oftentimes you can fritter away your time in worrying and being concerned about the sort of the details that you can't control, right? Those things that are outside of your control, and then you end up sort of looking back and finding that you had so much more opportunity to be spending amazing time with the people that you love, but you ended up wasting it, worrying about the things that you can't impact. And so I think that's probably been like the most impactful advice for me, is to kind of, because I tend to be someone who's like really, really involved in what I do. And that can mean whenever I'm working on a startup, or, whenever I'm working on a project that, I just get so engrossed in it, and it'll just be consuming. It's like all consuming. And oftentimes I kind of need to be slapped in the face, to take my focus out of it and say, hey, look, there's a lot more to life than this. And it's very fulfilling from a personal perspective to be able to do that. But at the same time, life is not just about sort of taking experiences, but also giving. And so, the people that you love around you, your friends, people in your communities, there's just a lot of enjoyment that you miss that comes from that. And I think that those are the richest experiences that you'll have in life. But unfortunately, we can tend to value the other stuff a little bit too much and get worried about our ability to execute on that and the small details that lead up to that, and through that end up missing opportunities to develop those amazing experiences and investing in those around us.
And QA, anything that struck you particularly?
Yeah, in terms of, I had the pleasure and the honor to work with a lot of people who gave me practical advice, and in terms of how to build companies and operate with innovation. But the in terms of the personal side, then one of the really good advice I've had is to control what you can control sometimes, because when and that struck me really deeply, because sometimes when you are trying to do something that which the weight of is humongous, and you can and it's really volatile, then you can be really stressed out. And so, in both personal life of my past as well as my work, then sometimes it's just good to just relax, because worst case, you're still here, everyone's still fine.
And QA, I'll ask you this, and then Makoto, and then I've got 3 closing questions. Actually, if this stumps both of you, either of you can answer it before. What's one question you haven't been asked before or haven't been asked enough?
Yeah, what I would say is probably, why have children? I think I'm a family person. I have 5 children. In fact, I might look younger than I am, but um, and I think that in sort of modern society, we just we're under a lot of pressure. Obviously, cost of living is going up, and as younger people, as you're growing up in this space, or sorry, in this world, you're looking at the prospects of buying a house that's way out overpriced, and sort of, how do you build a family, and how do you have kids, and what does that mean, and so that question of, like, why have children, I think is something I wish that more people asked, because I have been able to experience some of the best moments of my life with my children, and I think that for a lot of people, they kind of can't really imagine, okay, well, things are already such a burden for me, and to have to think about not only being able to have all the time I want to invest in my own career trajectory and prospects, but also having to deal with a partner, and then on top of that having children and the responsibility that's associated with that, and sort of the idea of getting locked down because of it or whatever. And what I would say is that look, in my case, I'm a nomad, right? I'm a digital nomad, and I do what I love, and having children doesn't stop that. And in fact, it's like, I live now in Eastern Europe, and my children are going to school here, and they're young, and a lot of people would think, wow, like, how can you move to Eastern Europe with young children? You've never been there before. You've been in Asia most of your life. Like, how do you do that, right? It's tough to think about, but the reality is just like, it just, stuff happens, man, and it's you have to go out there and do the thing you want to do, And I think the children part of that equation is that there's like so much fulfillment that comes from it, and so much joy in experiencing things with your children, and also taking the time to go out and explore the world with them. And there's so much beauty in their innocence, and their they're wanting to learn and experience new things, and things that I think that a lot of people are missing from life. And when you get so invested in your sort of personal pursuits, and you're worried about the impact that children might have on that, I would say a lot of people that, in my experience in life, and older friends that I have that essentially eschewed having children, and decided to focus on personal life, it later on in their life, when they don't have children, they regret it. And so I wish that a lot more people had asked me early on, like, why have children? What's so great about it? Like, why would you do that? And what are the limitations of doing that? And are they something that you can overcome? Or should I be fearful? And I think that it's not really related to our topic, but answering in all honesty, that's how I would answer.
QA.
My question would be, why should you take big risk? And so for context of this, I dropped out of Duke after 1.5 years. Before high school, I had some kind of crazy things too. But in terms of, why should, people in their lives, when the opportunity comes for them to do something they really want, and it's gonna feel really unnerving, why they should go for it, then I think that is what a lot of people refrains from chasing their dreams, and it's so it's the reason why is because with how people grow up, and how our brain is wired from our childhood and experiences and inputs from our parents, then a lot of people are going down a kind of a programmed path in life of set ways of doing things, and set way of decision making, um, and to be able to achieve true freedom in that I believe the truest sense, moving more than monetary or materialistic ways. Then true freedom is being able to do whatever you want. And so traveling down that path that each person is on, only with big risk and holding your guts, can you kind of break out of that and try and do something that you want. And I think it's really worth considering for anyone who's watching, to be able to try and go for it.
And my final question, and I ask this to every guest on Personable, and I'll ask QA then Makoto, is what is one thing that you would want a listener to take away from this episode?
So we're really passionate about what we're building. Every now and then, with the way people's habits are formed, you're really used to doing what you're doing, but just know that there is always a paradigm shift coming, a big change coming to change the way you are functioning and interacting with the world, and habits that you do. And we believe 100% that this change is coming with the advent of AI and all these capabilities that we are seeing. Then a paradigm shift is coming, and we would recommend people to be aware of it, and to be able to prepare for this.
And Makoto?
Yeah, I think I would have very similar, sort of desire for this takeaway. I think that there's a lot of change coming, and having worked with and built systems that leverage, the bleeding edge, these sort of state of the art models and agentic systems. I can tell you that the capabilities of this stuff are on a trajectory that are really going to fundamentally change, day-to-day life for humans. And I think that most people are just not really tapped into that. I don't think they kind of see it. When they play with ChatGPT and stuff, they're, obviously you have wow moments. But I don't think they really understand that, a lot of knowledge work, a lot of the stuff that, has taken years for humans to master and to build careers around, is going to be fundamentally disrupted. But I don't think that we should look at that and be fearful. I think what we should be doing is looking at that and thinking of this as a step change for humanity. We're going to have available to us and the tools that give us superpowers. And that's amazing because you can think, like, if you're an entrepreneur and all of a sudden, in times past where you wanted to build a business or you wanted to start an idea, it would cost you a lot in terms of time, in terms of resources and finances out of pocket to get something started. Well, we're entering into an era where things can almost be done instantaneously, where you have, a set of agents that are working for you that traditionally you would have to hire 4 or 5 people to do, to build out your dreams, to build out your ideas, and they can execute on that. And then all of a sudden now you can kind of imagine that, now what's really valuable is creativity and execution, which is what used to be super valuable. And that's where, Silicon Valley has sort of built its foundation on the premise of, okay, well, everyone has ideas, but can you execute, kind of thing, right? And that goes back to that ideas, but not opportunity, right? As I was sharing. And I think that, we should be pretty excited about what's coming, because it's really going to give that empowerment to people to be able to build your dreams rapidly, test them out, fail fast. If it doesn't work, if it's a bad idea, it's not going to cost you your life savings anymore. And so it's the same thing. What we're building is kind of taking from that and saying, look, you can get access to more sophisticated stuff. It doesn't have to be risky. It can be yield oriented. It can be, it might not be 100x a year, but at least it's going to steadily and safely generate income from you. And you're going to be able to understand that and be taught about it to a very deep level. And you don't have to be Warren Buffett to take advantage of it. So that is the takeaway.
Well, thank you very much, Makoto and QA, for coming on Personable. It's been a pleasure to hear both of your stories and what you're building over at OpenQuant. I find it fascinating to hear of the constant democratization of information through the internet, social media, and now through AI. And it's great to see both of you at the front of it. So thank you so much for coming on today.
Thanks, Harvey, for your time and for inviting us on. It's been a pleasure.